new vehicle sales stop, right? Look at how many new vehicles were sold just in the United States. We don't have to talk about worldwide. Just in the United States of America in 2008. You can look at 2009. You can look at 2010. You can easily Google, how many cars were sold or how many vehicles were sold in the United States by year. And you can see it all the way back throughout the decades. And what you're going to find is still plenty of people even buy cars in recessionary scenarios. But when you're in a tougher economy, less cars are sold. And so we got a smaller pool to go after if you're an automaker, right now. And when you're a Tesla and you're being ultra aggressive with pricing, it makes it vicious for the competition. I mean, it's going to be tough to deal with Tesla over this next, I would say, 18 to 24 months, while we're in a slower time period for high ticket sales. I'm talking new homes, I'm talking cars, I'm talking furniture, I'm talking anything that's really over a $1,000 price point, and specifically things that are like you got to get a loan for, right? That's the main issue we're having right now. And so it's vicious to deal with Tesla right now. Absolutely brutal. Check this out. Model Y last year was the sixth best-selling vehicle, period, in the United States of America. Sales were up 32%. What about Tesla's biggest competitor? What were their sales at? Oh, that's the Honda CR-V. Their sales were down 34%. Tesla is making a move here, not based upon they have no demand. They're making a move based upon they're going to want to absolutely put their foot on the neck of their competitors, and they're doing just that. And their internal combustion engine competitors, which they all are, right, are feeling the pain in the biggest way possible. The EV companies can't even really compete with Tesla. I mean, they're in a whole different league, and the internal combustion engine companies are getting absolutely wrecked. I mean, here you are having Model Y outsell CR-V. Meanwhile, CR-V's obviously losing massive market share, and Model Y is gaining massive market share, right? And so Tesla could easily rest on what they've accomplished here in their positioning, but they're saying it's not enough. We want more. We want more. We want more. And oh boy, okay, that's a serious situation. Now, the best-selling vehicles in the United States of America are trucks, if you didn't know, okay? F-Series sold 653,000 units. That was down 10%, by the way, from 2021, which 2021 still wasn't even that great of a year in terms of auto sales. We've kind of just, ever since Rona, we've been in a weak auto sales environment, okay? Silverado sales were also down on the year, 513,000. Watch out. Cybertruck's coming. Now, some people might think, oh, Cybertruck, it's no competitive threat to F-Series. No competitive threat to Silverado. This is the same thing they said about Model 3 and Model Y. And look who's dominating. Look who's dominating car sales now. Model 3. Look who's dominating SUV sales. And who knows, maybe I wouldn't be surprised if Model Y becomes the number one best-selling vehicle in the United States of America. I mean, it's a possibility, right? Look who's dominating there. And so to write off Cybertruck and be like, oh, it's going to be no competitive threat to F-150. Oh, really? The most famous vehicle in the history of mankind is not going to be a threat? Those might be famous last words. That's all I have to say about that. Let's wait to see Cybertruck. Wait to see those numbers as it starts to scale in 2024 and 2025 especially. Oh my gosh, okay? And just understand that Cybertruck could, keyword is could, be the number one best-selling vehicle for Tesla in the United States of America. It could outsell Model 3 and Model Y. It could outsell them combined. It's a possibility. When you look at what F-Series does, and you think about what Cybertruck's going to do for sales numbers, laugh it off all you want right now. But I'm telling you, the folks that are not taking this serious are in for a rude awakening. That's all I'll say about that. Rude awakening. Because, those boys need to watch out. That's all I'll say about that, okay? Look at home sales the past year. Tell me that's not recessionary. Look at auto sales. Look at how weak auto sales have been. Tell me that's not recessionary, right? In terms of the volume coming through versus, past years. Look at normalized time periods like 2019. Don't look at versus the Rona year. Look at 2019. Look at 2018 versus what 2023 is going to be. Come on, man. Look at furniture sales. Look what furniture companies are telling you, right? High ticket, not doing well. Luxury goods, not going to be doing well over this next year. And so I just think there's already been a recession going on in this particular space of loans, of anything, high ticket. If you want to comp Tesla against somebody that's a historic company, comp them against Amazon. They're the closest thing to reminding me of Amazon, right? Two totally different business models, but the way the CEOs run those companies, the way their thought process are, Jeff Bezos, Elon Musk, And the way they kind of execute remind me so much more of Amazon. And Amazon just always focused on growth, growth, growth. Microsoft, not really so much. They really were focused much more on profits, right? Steve Ballmer led Microsoft. During that era he's talking about there, before Satya Nadella took over, there was a Steve Ballmer era. Steve Ballmer era was much more just about running the business as a business and, making the profits and those sorts of things. It wasn't really about, they missed out on so many tremendous opportunities of innovation. They missed out on really like the iPod opportunity. They missed out on the iPhone opportunity, right? They let Apple snag all those massive businesses. They weren't forward looking. Tesla's always been forward looking, and so they've always reminded me much more of an Amazon than a Microsoft. Okay, that's all I'll say about that. And by the way, Microsoft much more respected, in my opinion, nowadays than when I first got in the market back in 08, 09. Much more respected company. Satya Nadella has done a phenomenal job with them. Steve Ballmer era, Bill Gates era, Microsoft did its thing. Satya Nadella era, Microsoft did its thing. Steve Ballmer era, it's just, he wasn't really that guy, in my opinion, and obviously it showed in the stock price performance, during his tenure. Yeah, humans are very bad at driving. We do know that. That is for sure accurate, right? And it's unacceptable how many lives we lose. And so it's going to be great when we can get, like I said before, like to an opportunity where, it's almost freakish to hear of somebody, a fatality in a car accident. Okay, so let's talk about $2,000. Let's talk about the robo-taxi opportunity. Do I think that's realistic? $2,000, 2027? No. I do not. I do not think that's realistic in 2027. I think it's possible someday Tesla can be there, maybe end of decade. I think it's a possibility, for them to go through its next 10x. But yeah, there's so many issues. Okay, first off, Tesla has to finish their technology, right? And they're going to have to get it to near perfection in order for the government to sign off on it, states, cities, to really, this to go huge, right? And then in terms of, all the vehicles being able to drive people around with no driver in it, that's all very time-consuming stuff, right? And then also you got to think, like, how fast does it take for that to take off whenever that does finally come? And it's not like it's going to all come at once. It's going to be a ramp process there, right? And I think there's going to be a lot of questions about actually profitability and margins the first few years when they do ramp it. So let's say robo-taxi opportunity, it actually starts to come to fruition, let's say in 2025. Okay, let's just use that as a number. Who knows? Some people may say it's going to be before that. Some people say it's after, whatever. Let's say 2025. When they do start to do that, I have a hard time believing that business is going to be profitable right from the go. I wouldn't be surprised if that business actually lost money, in substantial amounts of money, for years to go when it first launches. And then at some day it will scale to enough size where they'll be able to start making money from it. It'll be a great thing. But it's hard for me to imagine that business being profitable in everything right from the go. I think it's going to be like many businesses, lose money at first to then end up making money, kind of similar to how Tesla built their business, right? It was a huge money loser for the longest time. As they got scale, then they got to profitability. So that's kind of my 2 cents on that. Certainly big opportunities, but yeah, I don't want to get too excited about $2,000 stock price in that's 4 years from now. Come on, man. I think Tesla has good potential over this next several years, but yeah, that's a bit much in kind of my perspective there, okay? Does it feel like recession? Well, let me tell you, for me, I try to go to Starbucks at 11:15 a.m. It's not even supposed to be busy for Starbucks at 11:15 a.m. Like, come on, man. We shouldn't be at the lunch rush. We shouldn't be at the breakfast rush. Line was so flippin' flapjack and long, I thought they were giving coffees for free. I dipped out of there, and I was like, let me go to Dutch Bros. Went to Dutch Bros, it was twice as bad. I'm like, dude, I do not have 45 minutes to spend waiting for a flippin' flapjack and coffee. So I came home, okay? So that you see going on, right? Restaurants still packed. Lower ticket purchases still doing very well. It's really big ticket purchases that have really showed weakness. Homes, autos, furniture, luxury goods. That's the real areas we've seen real weakness in the economy. But in terms of overall economic weakness, I wouldn't go that far. It's mainly for the stuff that you have to take out a loan for. That's where people don't have a problem paying $7 for a latte. People don't have problems spending $50 or $100 at the restaurant. It's taking out a loan for $50,000 to buy a car or $500,000 to buy a new house. So the stock market basically hasn't done anything for 2 years. Okay, let's assume that we have a recession here, let's say the market still doesn't do anything for the next 2 years, that'd mean 4 years of the market going nowhere or down, right? I can tell you, you look at every single time period throughout history. If you ever got a 4-year span where stocks did nothing or potentially went down, it was a generational buying opportunity in that particular time. So I would say to folks, don't fear the market stagnating or not doing anything. And even if this market was stagnant for 4 years, believe me, there's going to be massive winners in that market as well and massive opportunities. Even in a market like that, right? There's going to be some that just don't do much, and there's going to be others. Look at where the Dow's gone this year. Look where ELF stock's gone this year. Look where the Dow's gone this year. Look where Tesla stock's gone. Even after today, it's still up 50% this year. Look at where the Dow's gone. Look where Meta's gone this year. Look where NVIDIA's gone this year. Look where the Dow's gone, right? And so just understand there's opportunities in any sort of market. And if you were talking about this scary scenario where, stocks are continuing to be down and out for another year or two, shoot, man, that's just like the best gift you ever got. That's all I have to say about that for investors. Now, this is something I saw on Twitter here today. Somebody posted this. Jeremy Grantham warns U.S. House prices are going to drop. Obviously, SP 500 could plunge 50%. More banking problems ahead and things like that, right? And Jeremy Grantham's kind of always out there, and I saw this. This was kind of funny. Predicted 15 out of the last 2 recessions. And, Jeremy Grantham, I definitely, I think he's very intelligent. But at the same time, the issue is with a lot of these folks that they kind of fall into almost like the perma bear category, and they're only kind of the value stock. And so they got just different mentalities, man. They got different mentalities to, it's a different time and age, right? And these folks, they can't wrap their heads around a stock that trades over a 20 PE. And the fact is, like, for growth stocks, it's unrealistic for these stocks to trade at a 20 PE, 15 PE. Like, Tesla's not going to trade at that. Amazon's not going to trade at that. NVIDIA's not going to trade at that, right? They're always going to trade exponentially more than that because those companies have massive growth over the next 5, 10, 15, 20 years. So to expect them to trade at these low PEs, and so when these stocks aren't trading at that, these guys get frustrated time and time again. And I've watched them for 15 years now. And they say, this is a bubble. This can't happen. This and this and this. And it's like, you're not going to get your scenario to play out where all these stocks that you want to be at this sort of valuation, they're not going to trade there. Like, I hate to break the news to them, but it's not going to happen, right? And so that's just something to kind of keep in mind there. And obviously, a lot of those guys don't like it when the Fed's pumping money out there. But then when the Fed's not pumping money out there, right, then they all of a sudden are saying the market's going to, crash 50%. And so it's like, well, what do you want? Like, you want the Fed to work against the market? Do you want them to work for the market? Like, what do you really want in these different scenarios, right? So I don't know, man. I just think that's the approach for a lot of these sorts of folks in the end, okay? Now, this was interesting. I saw this from a Twitter account. Lyft's new CEO started a week ago. He just laid off 1,200 people, about 30% of the company. The company lost $1.6 billion in 2022, $1.1 billion in 2021. Stock's down 86% since Lyft went public in 2019. This is something we're seeing play out in corporate America, especially in the tech world. And painful stuff to go through in the short term, but I can tell you this is going to set us up for a prosperous, 10-year run again. And if you look at the great financial crisis, there was a lot of things that happened. It was obviously a deleveraging of, consumers' balance sheets, a lot of companies' balance sheets, a lot of companies either going bankrupt or getting to a better level, right? Getting out of a lot of the froth in the system, companies leaning up their organizations. And that set us up for a decade runway of great growth, right? Great profit growth, great growth in the stock market, right? Great growth in the stock market. And that was all phenomenal. And so we see a very similar phenomenon going on out there right now, where you see companies like Meta doing massive cuts, right? Amazon doing massive cuts. I mean, we could go through almost every single big tech company out there is doing these massive cuts. Smaller companies like Lyft. Because at the end of the day, for these companies to lose billions of dollars, right, or just be bloated with their employee forces and doing jobs that is not even necessary, right? We've heard the stories recently about Meta employees that are making 100-something thousand a year, 6 figures a year, doing nothing, literally nothing. That comes from the employee's mouth, not coming from random other people. This comes from the employee's mouth. Like, oh yeah, I wasn't doing anything. I worked there for 6 months and I made $190,000 a year, did nothing. Like, it's ridiculous. And so these companies are leaning out. They're setting themselves up for a prosperous next decade. And I can tell you it's going to be healthy for the market overall. It hurts short term, but I can tell you it's going to be way healthier for us for the next 10 years when you go through one of these time periods at that company. So now, Patreon portfolio, I'm having a lot of fun building out this portfolio. And for all you guys that are, let's call it in the stage where you're under $10,000 invested, just enjoy this stage you're at in building your portfolio. To me, it's one of the most fun things is like building a portfolio from the ground up, right? Which we started this portfolio in January and just been building it. It's fun. It's a lot of dang fun to build a brand new, fresh portfolio. And I remember years and years ago, I used to play a game called, it was called Clash of Clans. And I built up my base like, super strong. And then I kind of started getting bored with it, so I started another base. And it was so fun, like building a new base from scratch in that game. It was like so fascinating and so much, it was just like a thrill of that, like starting from the ground up and doing it this way and maybe smarter and better than you did it before, right? And so with the Patreon portfolio, it's been fascinating to do that. Now, all you guys that are building out your portfolios, I don't care if you got $10,000 to your name, $100,000, $1 million, whatever, okay? Keep this in mind. Diversification, okay? I don't think we talk about it enough. It is so important to stay diversified. And if you look at what I'm doing with the Patreon portfolio, right? I'm building out a very nicely diversified portfolio across many different sectors and industries. Not getting too overweight in certain positions, right? My top 2 positions make up about 30% of my portfolio, and I feel perfectly comfortable with that. And you got to keep this in mind. Like the problem, what happened to a lot of people in 2022 that really shredded them up, to be honest, is they invested way too much into 1 or 2 or 3 stocks instead of building out a great portfolio, right? And that can get you in a lot of trouble because all it takes is 1 or 2 stocks not to work out and you're devastated, right? Options, another thing that destroys people. Margins, another thing that destroys people, okay? Margin and options are easy no's. You can easily say, I don't even want my account to be a margin account if you don't want that, right? You can easily say no to options. Like those are easy no's. Diversification trips up a lot of people because you're building out your portfolio and sometimes you get way overweight 1 stock or 2 stocks or something like that. Make sure you're staying, I'm telling you, diversification is what gets you through those bear markets, right?